David Rosenberg is with us from Rosenberg Research. David, always good to have you with us. I don't know that anybody really could have predicted exactly this outcome, and what I mean by that is that President Trump is signaling a fight, which could make for some real chaos in the days ahead. But from a market perspective, what's on your mind today?
Well, look, I think that what we should be prepared for is a Biden victory. The Vegas betting odds right now are putting that at 82% odds. And actually, if you add up the states that are still counting and where Biden is leading, that brings them to 270. So his path to the White House is over 80% chance right now. For Trump, it's barely 20%. And really, despite the bravado, I don't think that there's a lot of legal challenge that the Republicans can do. In terms of the question about the markets, I mean, it does look confounding because, you have a 1,000-point run up in the Dow Monday and Tuesday on the expectation of a blue wave, and what that's going to do for massive public sector spending and a huge infrastructure and basically massive fiscal stimulus that got the markets all salivating. And here you don't have the blue wave. That's one thing we know with certainty is that there was no blue wave. And I think that the markets in some sense are breathing a sigh of relief, just as you said in the open, that we're not going to be getting those tax increases. One of the reasons why the market was going down over the past month, it wasn't the value trade taking it down. It was the growth stocks, the technology stocks. So people were selling their winners to avoid paying that possibly higher capital gains tax down the road. What's happening is that risk has now been obliterated because of the fact that the Senate is going to stay Republican. So there's no tax increases coming through. So these investors are buying those stocks back. And that's really what the story is.
And I do note that in your morning note, your thought on the kind of long-only equity investor is to maybe get out of Dodge. Global is the place that people should look. Give me your thoughts behind that.
Well, what I was saying is that, for all the talk about having to contain China or punish China, that's going to be a classic case of every country cutting off their nose to spite its face. It's just not going to happen, and it's not realistic. The point that I was making is that the irony of ironies, because we're talking about uncertainty, that was your first question. Let's talk about certainty. Let's talk about certainty. The irony of ironies is that China, the epicenter of the coronavirus, is the only country in the world that's going to have positive growth next year and probably accelerate to over 8% next year. China is grabbing more and more market share of global GDP. Within the next 10 years, I reckon that China's economy will be bigger than America's. That's going to have all sorts of geopolitical consequences, and the question will be what can be done to curb that ascension. I don't think it can be reversed. The bottom line is that China's productivity growth is incredible. They are coming out of this crisis. Of course, they're a totalitarian state. They basically shut down a whole province for an extended period of time. They beat the virus, first country to come through. But they also never blew their brains out on fiscal stimulus or jeopardized the sanctity of their central bank balance sheet to get through this. So my point was basically, focus on how you can invest in China. Their stock market is much cheaper than it is in the United States. They have the fastest growth in the world. Really, I would say the best productivity trends in the world that's acting as a huge antidote to their demographic challenges. But China is a bona fide investable opportunity. It already has been. It's going to remain that way for an extended period of time.
The other thought that struck me as really interesting, and it's a continuation of a trend, but people may be drawn into some of these fast-moving groups like the tech and the biotech here. You still think hard assets with an income stream is a place to focus. What are some of the places you think make sense amidst all of this turmoil?
Well, in that daily note, I invoked the Mordechai Richter classic, The Apprenticeship of Duddy Kravitz. When his grandfather Simcha says that, you're not a real man without land. So what I was saying is that, look, these are really nutty markets. And we have a situation where you'd love to buy the value stocks because they're cheap, but the value stocks don't have earnings visibility. Then you have the growth stocks, which are terrific companies with great balance sheets and business models, but they are egregiously priced. So where do you go? So my thesis is maybe concentrate less on financial assets and concentrate more on real assets. So those real assets would be residential real estate. They, invest in mortgages, which is a debt that's backed against real estate. I wouldn't say office, but certainly industrial, warehouse, residential, especially single family. I think is in a bona fide budding bull market in North America because we came out of this pandemic with a real desire for open space, especially in the suburbs. So I was talking about real estate. I was talking about farmland. Think of farmland. Think of not just land as being something tangible, but think of the future of being one coming out again the pandemic and awareness of the importance of security of food supply. These are bona fide investable themes. I was talking also whether it's natural gas, pipelines, utilities.
That is David Rosenberg of Rosenberg Research.